right, everyone, welcome back to Robinhood Stock Market Watch List. Today is basically going to be Thursday, the 31st of August, right before pre-market. This gives us an opportunity to take a look at some scheduled events before the stock market opens. That way we can kind of prepare ourselves the day before. As normally our meetings pertain to the entire week, this is just going to be a little bit shorter version. But doing it late night like this, there are particular things that do appear on certain schedules this late, and that's why we can kind of talk about everything. And so, but the first thing that's important to always go over is economic scheduled events. And so it's something we talked a lot about yesterday, going over Wednesday. Basically, we talked a lot about mixed results and how sometimes bad news can be good news, sometimes good news can be bad news, and we're definitely seeing that trend. And so but the ones that are more rare, as I had mentioned before, the ones that are where we don't see a lot of, are going to be the strongest. They're going to be the most potent. They're going to provide the most volatility. And the ones that are rare is going to be our quarterly reports, and they're going to be our monthly reports. The weekly ones are just very, very mild. They just have a very mild effect, but they do have an effect, and they are considered a major economic report. And it does show, certain levels of information. But going into Thursday, August 31st, there are 3 economic reports that are scheduled to be reported. And it's important to know the times. If we're looking on the website, it's going to be Eastern time zone. If you're looking at it on the mobile app or your tablet, it's going to be based on your time zone. So it's important that you are aware that if it's going to be released before the market opens or after the stock market opens. And so in this case, these 3 are scheduled to be released 1 hour before the stock market opens. So it's just a massive, amount of information very, very quickly. But it gives the stock market an hour to, kind of digest it a little bit and to kind of process it and whatnot. But the neat thing about looking at this regularly on a daily basis is that there's more forecast information versus when we're looking at it during the weekend. Sometimes there's only half of it that's populated with forecast information. So, and if you're not sure what each economic report is, they are pretty repetitive, but if you do click on it, a new tab will appear, and it'll let you know, with a very small paragraph, let you know what it is and how it can affect the market or the economy. And so, but after a while, you'll memorize it and you'll just kind of know, what they are and how it affects everything. And so, and that's why it's important to know the forecast versus the previous. So let me change this to tomorrow because I'm in. So anyways, let's go to today. The Thursday, August 31st. So we have the forecast for the core PCE price index year over year from July is going to be 4.2. Forecast, which is basically higher than the previous. And so if it's higher than the previous, then it's going to be bullish normally. And so where the core PCI price index, same thing, forecast is 0.2%, previous is 0.2. You have your unemployment report right here, which is going to be a little bit higher than the forecast. So typically, the forecast, so this is, if it's higher, that's usually good. But the way that, the way that we're kind of looking at things as we're going over more interest rate hikes and everything, they're trying to lower inflation and trying to lower these numbers, and that's where we're kind of getting that bad news is good news effect, or good news is bad news effect. So it is possible that this could provide us some bearish characteristics, but then we have one right here where we can't really tell, is it going to be bullish or bearish. The unemployment report, this is a report where the lower the number is, the more bullish that it would normally be, or if it's higher, then it would normally be bearish. So this could provide the opposite effect, because that's kind of the pattern that we're seeing. And so we're seeing the bad news is good news effect. And so, unemployment is kind of rising a little bit, not much, it's forecast. So I think we could basically see some more mixed, characteristics, but we can see with the U.S. futures right here, that's live right now. We're in the green right now. And so let me get a little bit more details on the U.S. futures here. Yeah. So all three, we're up, 0.1, 0.2%. This late in the, at night. And so let's take a look at some stock options activity from the previous day going into the Thursday. Tesla had basically dominated the stock options, just like normal. Apple second place, Nvidia third, which seems to be kind of the new normal. And so Tesla at 2 million in stock options volume. We have Apple at 1.6, Nvidia at 1.3. We have a pretty good call ratio. We can see what Tesla is almost about 56% calls versus 44 puts. Apple is at 67% call ratio. That's not normally Apple. Apple's normally like either 50-50, 40-60. It's not a 30-70 usually. And so that's a little unusual for Apple. And that's what's neat. If we kind of look at this regularly, we know what's normal and what's not normal. And so Nvidia's 40-60, put and call ratio. So that looks pretty normal, but it's always good to kind of go over a lot of this stuff too, but also scheduled events. And so Apple's iPhone reveal again is here in just a couple weeks. And so there's a lot of news on it. There's the event. It's going to be September 12th, which is on a Tuesday, right? September 12th, yeah, Tuesday. So it's a big day. Normally, buy on rumor, sell on news. We usually see when Apple reveals, their phones and whatnot, or anybody that usually reveals something, their stock goes down. But so we have a wave right now between now and then of just riding that wave up. But once they reveal their phone and that's it, usually the stock goes down unless they surprise us with something, which is something we talked a little bit about before, is if they reveal their electric vehicle that they've been working on for the last 3 or maybe 4 years. And so, but they did announce it 3 years ago, and normally we see something after 2 years, but the COVID pandemic would have provided a 1 year delay. And so we should see some kind of Apple a vehicle of that should be revealed. I think if you've ever watched an iPhone reveal, they're pretty interesting. But there was a time where sometimes they surprise us, and they're due for that. And the last time they surprised us was with the iPhone X. You know, they were talking about the iPhone 8. It's all about the iPhone 8, different sizes, colors, this and that. And so, but then all of a sudden, they acted like all of a sudden the show was going to end. And but all of a sudden, Tim Cook was like, "But wait, don't go yet. We got a surprise for you." And all of a sudden, this whole new redesigned phone was introduced. And so, I believe they're going to do the exact same thing with the vehicle. And so I believe that they're going to act like the show is done, and then all of a sudden they're going to say, "But wait, you know, we got a surprise," and then boom, we're going to see this. And hopefully when they do this, they're going to start taking reservations. Hopefully they'll say, now you can go to apple.com and reserve this vehicle for whatever, you know, $500, $1,000, you know, $100, you know, whatever that they're going to offer. People are going to do it. They're going to want this vehicle and and want it fast, but you know, most likely they're not going to deliver it probably for another 2 years at least, if not 3. And so but this is inevitable. It's going to happen. It's not a matter of if, but when it's going to happen. And it should be this year. And so because if it wasn't for, you know, closing the economy down in 2020, it probably would have been revealed last year. So this is a whole new thing for Apple, and it's going to help manipulate investors and traders, and so that way they're going to be like, we gotta buy this. This is a whole new ball game for Apple. And so when you look at Apple's price, it's at $187.65. They're like, overall, like when you look at, you know, the last 5 years, it's like it's way up there now. You know, like, you know, when, you know, like what it was, you know, a year or a couple years ago. And or if not, it may have passed that by now, or on the verge to. And so it's also kind of a sign that that it may already be priced in, knowing that this event is going to happen, and it's just going up, and with you know, a high, you know, call percentage ratio, because like I said, this is unusual, and we're just seeing more and more, you know, a lot more activity with Apple. Apple's not normally this volatile. It normally moves 0.25%, 0.5%, maybe 0.75%. But we're just seeing these, you know, 1.5%, 2%, you know, swings, which does huge movements in the stock options world. But again, Nvidia, third place. AMC, I mean, what happened there? I mean, we're just seeing massive volatility, but this is a manipulated stock that does suffer a lot of time decay or time depreciation. So it's maybe good to maybe quickly get in and get out, but you definitely don't want to hold anything very long on AMC. And with a lot of the information that we see on the stock options, a lot of people are just betting against it. And so when it surges like that, it's going to give a lot of, you know, the bears more opportunities. And so AMD, which is pretty much a 50-50 call put ratio. Amazon, which is about a 40-60. Not really seeing a whole lot of unusual activity up until we get to about right here. Now, SU, which is the Suncor Energy Incorporation, I don't know what that is. This is not normally on this list. It's at $34.22. So it was only up 0.88%, less than 1%. And look at this. All of a sudden, we got over a 99% call ratio. That's unheard of. That is pure buying, betting that this stock is going to go up. So, you know, we need to do a little more due diligence. What are people buying? Because that is one of our key phrases that we always say is to always follow the money. And where is the money? Because we have 268,000 in options volume right there. And volume is always the current day's buying and selling activity. So we need to look at to see exactly what's going on. Is it buying activity? Is it selling activity? And what are the strike prices? And so I use a website called the NASDAQ website. They got some pretty cool little options area within there, and so the ticker is SU. So let's take a quicker look at what is going on with SU. And so do a little quick editing of the URL address. I don't have to do a big search for it because I already got the link. And so now we have the most active calls and puts for SU. And so let's take a look here. We can see the volume just right here is almost nothing for puts, and it's all just 99% all calls right here. And so what are they betting? So this stock, which is $34.22, and so we have we got a lot of strike prices that are in the money. A lot of them are going to expire soon. But we don't see really any. A lot of them are basically in the money, which is usually what I recommend, always be in the money. And so it looks like that's what a lot of the investors are doing. But the main one people are focused on is the September 15th $30 call strike price. Again, staying in the money. And the values of that one is basically, it's going to be basically $425 a contract. So, that's going to be, or maybe even it says up to $495 a contract. So just under $500 for each contract on that. But, there's just a lot of unusual activity on that. I wish the stock price was a little higher with a little longer expiration, especially that one for next January, $17 call strike price. When they have a higher strike price, gives us kind of a better idea of kind of where they're betting it's going to go. But when they're betting at the money, investors just don't know, so they're not taking any chances. But they do know that there's going to be more movement in that direction, and so that's why they're betting on it. So we'll take a look at some more here. If there's any more unusual activity, we can see that the Kenview Incorporated is at $23. We do see 77.5% put ratio and a quarter or 20 almost right around 22%. Call ratio. So the majority of investors are definitely betting against this Kenview Incorporated, which is KVUE for the stocks. Going down the list again, we got Johnson & Johnson, JNJ, which is currently at $163.73, is down just like around 0.25%. Hardly anything, but all of a sudden people are starting to bet against them. Johnson & Johnson, which is, they're not normally on this list. They do tend to be on there when there's some kind of activity going on, but they are a pretty obviously well-known company. But 90% puts on Johnson & Johnson. And then we have Tilray brands. There's a lot of some cannabis news going on with I believe the government, so that's caused a little bit of some cannabis trend. And so Tilray brands, which is TLRY, is currently at $2.66, is up just under 11%. And a decent amount of options volume, 92.2% call ratio, and just under 8% put ratio. But definitely let's talk a little bit about cannabis, because I've been through a lot of different situations, and I've been through the cannabis situation that happened in Canada, and the same situation is basically going to happen here. It's inevitable. It's going to happen. It's just a matter of when it's going to happen. And so this is the game plan for cannabis. Because what happens is when people, investors in Wall Street, start seeing that legalizing recreational cannabis federally where all the rest of the states are able to participate, they're going to start pumping up cannabis stocks, and up until between now and or whenever they announce this, to the point when it actually does get legalized. Now, cannabis stocks are going to surge hundreds of percents, maybe thousands of percents. It's going to be a huge money-making opportunity. But as soon as they legalize it, it's all going to plunge, and they're all eventually going to go back to penny stocks. This is not a long-term thing. Do not let anybody brainwash you to think that cannabis is a long-term thing. And the reason why it's not is because when it becomes legalized, it'll flood the market. When you have a high supply and a lower demand, the value goes down, and you don't want to own any of that's going down. That you bet against it. And so, but it'll give us another one-time opportunity to take advantage of this huge cannabis hype. Now, it's going to get legalized in either two situations here in the United States. It's either going to so once we get to, like, let's say 26 states, there's a certain number, I can't exactly remember what it is, but I believe it's like 26 states. Once we have 26 states that have legalized recreational cannabis, it's just going to be automatic for the rest of the country, because now there's more than half that have legalized recreational cannabis, and then so it'll just be automatic without voting or whatnot. The other way is them voting on it, and which they've done this a lot in the past, and it just, I mean, it sometimes it goes through certain channels, and it almost makes it to the finish line, but all of a sudden they just kibosh it, and it doesn't go through. So then they're like, all right, better next year or whatever, and so they try again, and it just doesn't go through all the hoops. But eventually it could possibly go through all the hoops, and they just may say, okay, let's just do it. It's inevitable. It's going to happen anyways. Might as well just vote on it. Just let's let the federal government start making a lot of money off of it. And so it's going to happen. And when they start announcing that, and giving the idea to other investors in Wall Street that this is inevitable, it's going to happen, they're going to start investing onto it early, and we're going to start seeing Tilray go from $2.66 to $5, $10, $20, $50. Tilray used to be $150. That's where we were trading it at. And we started, trading it as things were trickling down. They all fell down to penny stocks, and it's all going to happen again. But these are going to be the next manipulated stocks that we can kind of pour fuel on the fire and make it more volatile. And so, but it's all about timing. And so the timing, is not quite there yet, but if the government starts talking about things, we really got to start listening in, and when we see that, all of a sudden we start seeing this 92.2% call ratios type stuff, and day after day we start seeing more volume. Like tomorrow we could see Tilray start being more halfway up the list, and eventually we could see Tilray up 20, 25, 30%, and all of a sudden it's on the top 5 of the list. And whatnot, but it's still a penny stock, and it's going to have a lot of time depreciation as well. If you do options on penny stocks, you always want to be in the money or deep in the money at that, so that way you're not suffering time depreciation and whatnot. That way the system knows that you're going to be fine either way, being not out of the money. Then we got Disney. Disney made it on the very bottom of the list. 65% put ratio, and then we got 35% call ratio. Disney, which, for long-term investors, this is a pretty good buy for at that price, because not that long ago it was $120. And so it is inevitable. Disney will come around. They've made some pretty poor choices in the last couple years or so, and so, but they'll figure it out. They'll bounce back up, and they'll get back in that $120 price range. So let's take a look at some of the most active individual calls and puts. Okay, let's see what are people buying. So Tesla still being number one is we have a $260 call strike price. And we have, which is doing pretty decent. It's got a lot of volume, a decent amount of open interest, and going down the list, Apple, we got one that's pretty much in the money. We have an Nvidia, a $500 call strike price. It's at $492 right now. A decent amount of volume and open interest. Got a $190 call for Apple. That looks good. We got that K view. We got a $30 put, which is pretty deep in the money on that one. We got that SU, one that we're looking at that was providing some unusual 90% call ratio information, and that $30 call strike price that we found. That expires in approximately 15 days, which is about September 15th. Kind of go down the list, see if there's anything else that's kind of unusual. There's a Johnson & Johnson put right here, $210 put, and again it's at $163, so that one's pretty deep in the money, and expiration date is really right around the corner. Now it's interesting because look at the price of this is basically $4,500 per contract. Basically, this is what the high rollers trade. Because when you become a high roller, it's a pain in the ass to deal with a lot of contracts. You don't want to deal with hundreds of contracts because contracts start executing in spurts. It doesn't all happen at once. And you may have already know this or have found this out. But like, let's say if you're trying to buy or sell 100 contracts, all of a sudden 10 execute, then maybe 20 execute, 5 execute, 10 execute. And then all of a sudden, if the price changes not in your favor, then all of a sudden, it's a partial execution. It doesn't execute all the way. And then you're like, and then you got to cancel or modify and try to, get it to execute, as quickly as it can. And so that can be avoided by increasing the value of each contract while limiting the amount of contracts to a smaller number. and that's kind of what we're seeing. A lot of what the high rollers do is they have a smaller amount, and this is quite a bit. 87,000 in options volume at 4,500 or $4,700 a contract. That's that's quite a bit. And so the high rollers are betting against Johnson & Johnson, staying deep in the money there. But they don't got much time left, just a couple weeks, but they'll figure something else out. So keep going down the list here. Let's see if there's anything else that's pretty significant. There's Tesla $265 call, which expires in this Friday. Let's see if we keep going down. There's another, 245. So just a lot of straddling too. There's a lot of this is straddling activity. And again, I always recommend straddling because I had a good friend tell me once that as soon as someone tries to figure out the stock market, that is when the stock market has that person figured out. You may try to do something and it may work, you may get lucky, and maybe it just kind of goes with this season. And the bull season and the bull market is always a favorite time for people to invest because they just buy shares, whatever, and calls, and the market goes up and they make good money. But when it doesn't, when all of a sudden we go into bear season, bear market, the economy crashes, people are going nuts. And there's when we straddle, we're straddling both calls and puts. That means we're betting the stock goes up and we're betting against the stock, betting it goes down. And I know that may sound conflicting. Why would anyone bet a stock goes up and down, or up and down at the same time? It's because you can only lose what you have on one side, but your gains on the other side are potentially unlimited. So it doesn't matter if the stock goes up or down, as long as it picks a direction, it can make the situation extremely profitable. In a lot of cases, if the stock doesn't move, it can be a wash, and it's important that if it is a wash, it can only be a wash for a certain amount of time, and then we got to bail out, because otherwise, if we continue to hold for a longer period of time, then you're going to suffer time depreciation and time decay, and we don't want that. And so I want to try to pull up Apple, which did pretty well today. I want to show you just what it can. So Apple was up $3.50. And so it was at basically at right around $184 the previous day. And as I've always mentioned, my rules and guidelines is to always buy our straddles right before close and then sell them the next morning. And we repeat the process over and over again. And so, but always we want to straddle the top 5 stock options, or the top 3 stock options, which is what we just saw: Apple, Tesla, and Nvidia. Those are strong, they're not the manipulated ones or anything like that. They're usually on there, and those are the ones that we normally want. But just like other situations, like let's say sports, an athlete, you get a young, guy that, is doing very, very well, and he's the number 1, number 2, or number 3 guy. Well, eventually, they age, they wear out, they retire. And so a new guy comes out, or, gal or whatever, and now they're the number 1 athlete, second, third, or whatever. So the stock companies can be the same way. So it's important never really fall in love with the stock. Don't get emotional. Stick with the process, and stay focused. And so the guideline is to always trade the top 3 or the top 5 most active stock options. And so focusing on Apple here. So let's say that we straddled Apple's $185 call and put right before close the previous day. So that means that your, and this is just info from towards the end of the day, but with the morning being pretty volatile, the numbers, percentages could be more extreme. And so let's say that you lost 81% on one side. On the other side, you just gained 235%. So what happens is your gains outwashes your loss, and it puts you ahead, like way ahead. And so, and we would just repeat the process over and over and over again. So let's say that, let's use some small round numbers. Let's say I put $100 on one side and $100 on the other side. So the total investment is $200. And so we lose 80% off the $100. So that $100 now becomes $20. So that's what I got left on that hand. The other hand, I had another $100. We just gained 235%, but we'll just round it down to 200%. So that $100 now becomes $300. Plus the $20 that I have on the other side, we'll put that together. So now I have $320 or plus, because it's $235. So really, I probably have like $350 right there that I originally had $200. And it doesn't matter if the stock surges up or plunges down. As long as it picks a direction, it always gives us something to work with. And you get to sleep better at night, because you're not worried, did I make the right decision? Maybe I should have gotten a call instead of a put. Maybe I should have gotten the put instead of a call. Well, make it a rule to remind yourself, never have a call without a put, and never have a put without a call. We got to have these certain guidelines to kind of to control our emotions, because otherwise our emotions will basically have the best of us, and we don't want that. We want to control our emotions. We want to control everything. We want to control the process. We got to know the process that we need to control. And so, but this is so again, it doesn't matter. This is a wonderful strategy that works throughout the entire cycle, whether it's the economic cycle or the stock market cycle, whether we're in a bearish market, if we're in a bullish market. It is a win-win strategy that we never have to change, because sometimes if we're in a bull cycle, we need to focus on bullish strategies, or if we're in a bearish cycle, we need to focus more on bearish strategies. With this, we don't have to change.
change. We just, because, as long as it's volatile, it just gives us something to work with. And it works even better if we straddle into a day that's scheduled with economic reports. And so, but if we're straddling into a day where there's nothing scheduled, then most likely there's just not going to be a lot of activity. And so hopefully that makes sense. If anybody has any questions, feel free to unmute your mic and we can talk or explain things. Or I can help you set it up because we got screen sharing and everything. But if not, we can move on here. So, but at this time too, the government, the president in the White House announces their schedule for the next coming day. So that's another reason why we're going to have these live meetings, is because this information gets populated this late. And so it's important that we always know what's going to happen before it happens. And so basically, there's going to be no Joe Biden on Thursday because he's not scheduled to appear. Probably got a doctor's appointment or something. But it's just nice to know that he will not, most likely, he will not interfere with the stock market with basically putting his foot in his mouth. And so, but we do have the White House briefing, and so that will affect the stock market. But this is something that normally affects the market during like power hour later on in the evening. So we have the economic reports, we have earnings and stuff in the morning that provide us the volatility that we need, and then we have the evening volatility for the power hour. Again, kind of pouring fuel on the fire, making the situation more volatile. This is, I mean, they do this intentionally. It's just amazing, and it's important to know this stuff. That way we can always take advantage of it. But it doesn't show what they're going to talk about until it basically kind of happens. But the way we tune into this is that we basically go to YouTube and type in White House Live, and we want to do that about 15 minutes before it's scheduled to happen. Or if it's the president, like earlier, where President delivers remarks on the whole government response and the recovery efforts of Maui, that is gives us some more information of what they're going to talk about, and as well as when. And so, but usually journalists ask questions during the White House press briefing, and they could ask anything that's on their mind or anything that's on your mind, because whatever's on your mind, most likely it's on the journalist's mind, and they're going to ask questions right then and there, and it instantly affects the stock market. So that's why it's always important that we always listen in live. And so and it's just really easy. 15 minutes before, go to YouTube, just type in White House Live or Joe Biden Live. But this is information provided by the fact-based website, so which is pretty neat. And but I just wish that it would provide us more of the schedule way before in advance, not really like the day of. But this is it is what it is. This is what we got, and this is what we have to work with. And so, but also to remind you that even though that Apple's event is September 12th, Tesla will be having their event soon as well. They're going to be having the artificial intelligence event. Well, they'll be going over their robot and stuff, and so that's where we can see a lot of interesting things, because it's all a matter of them requesting reservations. And so that's a major part that will manipulate investors and traders, is if they start taking reservations, because that means that they're getting close to mass producing this and taking money and making a lot of money off of this technology. And so but normally the bull season ends towards the end of September, or the end of the third quarter, or the summer season. And so, but normally so the 15th, which is on a Friday, it's the third Friday of September, is our triple witching event. It's going to provide a lot of bearish characteristics. No matter what you read online, sometimes it'll say, oh, it doesn't. It does. With my experience with these triple witching, it always has. So it always gives us an opportunity to profit from it because it's another event that is very, very predictable. And so, but so just know that is another very predictable date that we can take advantage of. And triple witching really just means it's just there's a lot of things that expire, so it kind of forces people to sell. And when people sell, it just things go down. We're in the red, and so it's just a predictable day. So that's where we want to probably hold mostly puts over calls. And so, but again, yeah, it's just nice to know. But let's see if there's any info on the Tesla. Oops. Tesla original day. Because I think there's just kind of rumors scheduled for September 30th, Tesla Day, AI Day, 2023 scheduled for. Yeah, okay. So it looks like I think they may have already announced the day for that. So the 30th is basically is on a Saturday, which is interesting because Elon Musk wants to do this really without manipulating the stock market currently that day, but that also means it will on Monday, which would be let's see, it would be October the 2nd. So that is, oh wow, not only. Wow. I mean, Elon Musk does some brilliant things, and it's just a matter of just put some of the clues together. And so I just noticed. So he does the event on, again, the 30th. Okay. Follow me with me on this. So Saturday the 30th is the last day of the month, but also the last day of the quarter. What normally happens at the beginning of the month, but also the beginning of the quarter? That's when an EV company releases their sales and delivery report of how many cars that were ordered, how many vehicles that were produced, how many that were delivered. Investors love that, and that's why he releases that. So we're having kind of like a trifecta here. So not only is October Monday the 2nd going to be affected by the AI day throughout the previous weekend, but they're going to announce the previous month sales and delivery reports as well as the quarterly sales and delivery reports. And if you saw last quarterly sales and delivery reports, they did over 400,000 Teslas in a quarter. A record-breaking number for them and anyone, in some kind of tech or automotive industry. And so, he's just setting the bar higher and higher and higher. And, if he could do that, he's probably going to do it again. And so, but we'll go over that more as the time comes. But just know that Monday the 2nd is going to be a massive volatile day for EVs and particularly Tesla. And so, but we've seen a lot of Tesla activity accumulate over time. If we look at the open interest with the most active stock options, we've seen some pretty high levels for Tesla. Let's see if they are still here, or unless they kind of trickled down. I don't see that anymore, so I'm sure the amount of open interest has probably trickled down a little bit. But there was a $825 call strike price for Tesla, and so, but I'm not really seeing any Tesla options with a high amount of open interest. But let's take a look at see what we do see. Because if you're not into stock options, but you're more of a long-term investor or trader, this is still great information, because when we sort things out by the highest, open interest, it provides us a much longer expiration date that we may be able to utilize on a time frame. And so, but if we try to find something that is pretty, far apart from each other, like this, which I believe is C, which is what, Citibank. Let me double check here. Yeah, Citi Group, which is the Citibank, basically is $41.37. We have a $55 call strike price that expires next January. And so even if you buy shares of that and it gets to that, you're 41 to 55, that is a huge gain. What, 35, 40%, something like that? And so, and they may be a stock that'll pay dividends. So not only are you holding on to something that's going to greatly appreciate, but they're going to pay you every 3 months just because you're holding on to their stock. But if you decide to buy their contracts, look at this, $16 per contract. And if it gets from that to that, even close to that, in even half the amount of time, it's going to go from $16 a contract to $160 a contract. So now you're going to gain like 1,000% if that actually happens. And so, but we are getting into the holidays here in the coming months. And so more and more people, when you look at, if you read the news, that they're kind of hinting that more and more people are using their credit cards and stuff. And if interest rates are going up, people are using credit cards, banks are going to make a lot of money. And so they're going to prove that within their financial earnings releases. And then all of a sudden, investors will be like, "I'll be damned!" And then there's to start, pumping these things up, and they're going to go from $41 to $55 just like that. And so, and we're seeing that with an accumulation of open interest, which, if you don't know what that is a total number of open contracts for the previous day that have been traded but not yet liquidated via offsetting trades. That means people bought that prior from the current day and have not sold it yet. And so that is just showing people have bought it and are holding on to it unless it goes down. And so we can see, look at AMC, we have $12.73, a $2 put. Stay away from AMC and manipulated stocks. It's just my recommend. It's kind of what I tell myself, because there's just so much time depreciation in those, and so it can easily be avoided. Some other ones here. Any big ones? Let's see. Any big significant ones here? Let's see. PTLR or PLTR, which is at $16.33. We have a $20 call strike price. And so just from a $16 to $20, that's another good gain. It's like what, 30 or 25%, 30% or so, just from that. And then once it gets to that, it can keep going. And so and that's only up until January, and it's been accumulating a decent amount of volume and open interest at the same time. Then we have NEO, which has been kind of hovering around that $10 area, but we got a $15 call strike price. Now NEO's been doing some. If you've seen their numbers, they're hitting some their own little records, even though they're pretty small compared to a lot of the American companies, but they're breaking records. And NEO, it wasn't that long ago, well before our last election, that NEO was at $60 a share, all day long. It belonged in that $40, $50, $60 area. It only changed because the NEO company required a lot of American advanced microchips like Nvidia. And so when Biden came into office, they cut them off and said, "China, you're on your own." And so, they just had to figure something else out, and that's what really, really hurt them, and it really lowered their, production and stuff. But they're vamping it up. When you cut somebody off on something, they're just going to figure out another way. It's like a teenager or something. You just can't. And so, but there's a $200 call strike price for Apple. Also expires in January. But once Apple does reach to even $200, we're going to see some much higher calls. I mean, there's a $210 one. Apple's just really gaining more and more momentum, and we got 2 more weeks until they reveal. But if they do not reveal that electric vehicle, Apple's stock is going to plunge pretty significantly, and probably for a couple days. So it is imperative that we all watch this Apple reveal date live. I mean, even if you're at work, you need to listen to it. If you can't see it, you got to hear it, because it makes a huge difference, and it happens the stock will move very, very quickly. It does not wait for the news. We do not wait for the news because we're basically doing the same thing as a journalist. We're doing this reconnaissance. We're knowing these dates and times of these events, and these news journalists, they're just going to take time for them to write an article, and it takes time to blast it out. And by the time things are happening, you're 5, 10, 20, 30 minutes late, or even an hour late. And we don't do that. We are a professional trader, and we always need to know what's going to happen before it happens, and we always got to stay tuned of what's going on and be aware of what's going on, so that way we're not left in the dark. And so this is just kind of like our radar system, so that way we're always aware of what's going on, when it's going on, how it's going on, and not letting anything fly underneath the radar. And so hopefully this information has helped. But we can take a look now at some of the earning releases that are scheduled to happen. Now, Thursday, the big ones are basically going to be the Dollar General that is scheduled to be released Thursday morning before the stock market opens. Then Thursday, after the stock market closes, we basically have our Broadcom, and then we have the Lululemon and the MongoDB. These three are major ones that we'll take a look at here. And so so I save a lot of my posts are all saved under the featured areas of our Facebook group. And so that way we can scroll down and kind of take a look. Now, the Dollar General basically is expected to miss their estimates, their EPS. And so the investors are bearish going into the company's earnings release, but with a 45% expecting an earnings beat. The cost, when the cost of fuel goes up, the cost of shipping goes up, the cost of transportation goes up. When your price is $1 or within that vicinity, your cost of your shipping is going up, and you're losing your margin, your profit, and so your revenue is going to go down. Even though a lot of people think that inflation is going up, you would think that the dollar stores would do great. Well, they do in volume, but they're still not making enough revenue. And so option traders are pricing in right around 8% price movement in either direction, and 45% expecting an earnings beat going in the upwards direction is most likely 55%. It's going to go down 8%. Let's take a look at the Broadcom, and is expected to beat their estimates. Investors are bullish going into the company's earnings release with an 81% expecting an earnings beat. 81%. That is way above average. Normally average is like right around 65%. So 81%, that is, great job. Option traders are pricing in around a 7.5% price movement in either direction. Normally it moves right around 3%. So we are expecting a lot of volatility with this one, and it is, they do manufacture microchips and all kinds of, computer components and networking and all kinds of stuff, and so they are a very volatile. They're going to be a very volatile stock later today, and so Broadcom is AVGO. This is definitely got to be on our watch list. And so I normally don't recommend holding calls or puts throughout earnings, because if it doesn't move, then even if it does move a little bit, both calls and puts suffer due to something called implied volatility crush. Sometimes we may hear someone say IV crush. It basically crushes the value of both sides at the same time. But it's something that can be avoided by just not doing it. But if we want to take advantage of the volatility, we can straddle or buy calls or puts on something else that may also be affected by its volatility. And if it's a semiconductor company, we can easily straddle or buy calls or puts on AMD or Nvidia. Those are our top dogs that when it comes to the semiconductor world. Or we can do maybe something else that may be similar to the brand, and so that way we are not affected by the implied volatility crush or the IV crush. Or if you do like to trade throughout earnings, through the options for earnings, then it must be considered as a lottery play. It's no different if you were to buy a lottery ticket. You're not going to spend a lot of money on a lottery ticket, because if you win, you win. If you don't, it's money that you're not going to be worried about. And so and that's why it should be considered as a lottery play, because sometimes there's manipulation, there's all kinds of weird things, or sometimes it just doesn't move. Sometimes there's mixed signals. Maybe it has great revenue, bad EPS, estimates, and so sometimes we with that mix release, sometimes the price doesn't move anywhere, and so but again, yeah, it can easily be avoided. Talking about Neo, look at this. So this is a part of last July, 20,000 monthly deliveries. That is, like I said, record breaking for Neo, and that's why we're starting to see that $15 call strike price for Neo, because they're ready to go to the next level, and so is their stock. Some of these did pretty well. Salesforce and the Crowd Strike. MongoDB. So let's take a look at this one. And so this one's coming up again after close later today, which is Thursday, August 31st. They are expected to beat their estimates. Investors are bullish going into the company's earnings release, with a 97.7% expecting an earnings beat. That is like unheard of. Very rare do we see that. But when we do see that, what normally happens? It's almost like like a trick. What do you call it? Like a bull trap. And so normally, and sometimes they do beat, but 97.7 is like a dead giveaway. It's going to happen, and we go buy the rumor, sell the news. All of a sudden, it goes down, and so we get confused. Well, they've been really expecting it. It only seems to really go up if it's like kind of like, or it really could go either way. But if we know that it's just going to beat it, it's like it almost takes the fun out of it, so it just goes down. So it kind of does the opposite effect. But option traders are pricing in a lot of volatility with this one, pricing right around 14% price movement in either direction. But it looks like it's been pretty volatile in the past, and it's averaged right around 20% price movement in either direction. So either way, we should see a lot of volatility with this one. And so as a lottery play, we could just maybe buy calls, or maybe buy puts, or straddle it. But, we should see some pretty big swings with this one either way. And so that'll be a pretty interesting one. So we definitely want to put that one on our watch list. And so the Lululemon, I thought I had a report on that. Okay, here we are. So Lulu is the ticker LULU, which will be released after the stock market closes today. They're also expected to beat their estimates, but investors are also bullish going into the company's earnings release with a 68.5% expecting an earnings beat, which is good. Option traders are pricing in right around a 9% price movement in either direction, and normally it's moved that much in the past. It became a volatile stock, especially after the pandemic. And so it's been very volatile since then, but it's kind of slowed down, quite a bit. And so, but these are definitely some things we definitely need to keep on our watch list. And so, but this was kind of an interesting short video that I found. I did post it under our featured areas. If you haven't seen it, I definitely recommend watching it. But it's interesting because he talks about, these guys here that are talking are very, very well known, reputable financial experts. And just last week on, I think it was Friday, BRICS, which is a five nation kind of a posse that decided to get together. Basically, we have Russia, India, South Africa, and Brazil that decided to, and China that decided to kind of, hey, let's partner up and kind of start our own kind of United Nations. And so, and most likely their own currency and everything and whatnot. So the guy talks about, so they just recruited more countries last week. And so so the US dollar has been the world's most used currency. And so that creates a lot of value and everything. And so, but they also open it up to other countries to kind of participate in, the banking system and stuff like that. And it's kind of like signing up for like a Square account, PayPal or whatever, or something to where, you're trying to, establish a business, you want to process credit cards. Well, you have to pay a bunch of money to start accepting credit card payments. And and then there's all these fees and whatnot. So it's all just kind of a money making system. And so these countries are kind of tired of that. So they're trying to create their own rules and trying to encourage other countries to participate in their thing. It's going to be much better. And so the grass is not always greener on the other side. But they're trying to persuade countries into signing up for this. But this video talks about once it gets to a breaking point. What is the breaking point? Is it going to be 40%? Is it going to be 50%? Is it going to be 60%? Where the 50%, I believe once we get more than 50% countries on board using their currency and their programs, the US dollar will become second place. And we've never seen that before. And so once that happens, what if the U.S. dollar crashes? The United States government can do more things to manipulate things. What if we do, what if we start using crypto, the U.S. dollar, digital dollar? I mean, something's going to happen, and it just seems like it's going to happen. It's inevitable it's going to happen. It's a matter of when, not if. And so, but this is a great video. When I watched this, that's when the light bulb just kind of clicked. And so I definitely recommend watching it because it's happening. It's not a matter of conspiracy or whatnot. It is happening. And so it's just a matter of that breaking point, like this guy mentions. What is our breaking point? It's no different than you taking a let's say a pencil and you're slowly bending it. You hear that little crack sound, snap, crackle, pop. Well, once we get enough pressure in the middle of that pencil that's bending, all of a sudden it's going to snap, it's going to break in half, and that's the situation that this is in. It's just we're starting to feel that little snap, crackle, pop there, and imagine, and eventually it's going to snap, and it's just things are just going to get really, really intense. And so, but again, that's one of the reasons why I always recommend straddling, because it doesn't matter what the situation is. with the market or the economy. As long as it picks a direction, whether it's up or down, it provides a very, very profitable situation. And so, and we want to establish this wealth, because once you get to that point where you're making tens of thousands of dollars a day, you no longer need to look at price tags anymore. If you want it, you get it, and you help your friends and family and neighbors pass it forward. And so that's what this is about, and is our financial freedom. This is our way of establishing our own lottery ticket, is being able to kind of create our own wealth from these great opportunities that's provided to us. It's just a matter of maybe someone guiding you there. I always say, as someone said to me once, that you can always lead a thirsty horse to water, but you can't make him drink it. And so that's one of the reasons why we do these meetings, is that way we can kind of provide a lot of great information and opportunities out there that you can kind of utilize for your advantage and your benefit. So hopefully this has helped. If anyone has any questions, you can let me know.